Mm-hmm.
Here we go. See, now I'm not ready. I said, let's go, and then I'm not ready. Here we go. Thank you so much for joining us this weekend and making us a part of your world. Just learned that more than 7 million Americans over age 65 are now living with Alzheimer's, the highest number ever recorded. And this is from the Alzheimer's Association, a report that they just put out. They also say that last year, unpaid caregivers of Alzheimer's provided more than an estimated 19 billion hours of care.
Wow.
And that care is valued over $413 billion. Now, a lot of people need caregivers for a lot of things more than just Alzheimer's. I mean, I don't know. We've talked about it on the show, not as much as Disney, but both of my parents deal with Parkinson's. And so I decided to adjust my life to be their caregiver, along with some wonderful, thank you, God, paid help. But here's the problem that I know a lot of people are facing because it's so forward facing in my life, guys. So many insurers have stopped selling that standalone long-term care stuff that everybody had for so long. And the ones that are still out there are often just too much money because if you don't use it, you lose the premium you paid.
Well, that's so true. And I mean, it's hard to get away from it. Our next door neighbors who just happen to be awesome. They do some caregiving for, a parent, they're watching over, not full time, but they do. And, I think about when my dad was in his, latter years and my mom was essentially his caregiver, and you're a caregiver for your parents.
And my sister's currently a caregiver for my grandmother, my Nana.
Yes.
It's becoming more and more common.
Yes.
Or maybe just more and more talked about. Either way. But
yeah.
Let me pick up here. Or maybe it's just more and more talked about. I'm not really sure. But what can we do besides stashing a lot of cash to better prepare for a long-term care event? None of us want it. Let me be clear.
Right.
But we got to be prepared.
Yeah. And think about all the risks that we try to prepare for, whether it be the possibility of a house fire, whether it be a possibility of things like a tornado hitting our house or, some catastrophic thing that happened at home, or the potential of, having a car accident, the potential for a flood in the basement, which for us is like pretty high because
it's like yearly,
gosh, we've had so many of those, with sump pump failures and it's crazy. But this thing about long-term care, there's a study that it was actually an AI study that says that approximately 70% of those who live past the age of 65 will require long-term care.
Gosh.
Now, yeah. And we know the average is 2.5 years. So
I'm here to tell you an average is not a real number.
No, because how long have you been caring for mom and dad?
5 years now.
5 years. So, I mean, it can be a long, long time. And, Alzheimer's, dementia, Parkinson's, so many different ailments that can cause, our care to last a long, long time. 1 out of 9 people age 65 and older have Alzheimer's. That seems huge to me. This is such a big, big deal. And,
and I didn't want to bring this up to be a Debbie Downer. It's more of, I know people are seeking a solution.
Well, yeah, your name's not even Debbie. I mean, so
there we go.
Had to brighten it up a bit, but it's a big deal. So you have to think, okay, what are the types of care that people might need? Well, home care, which is kind of what you're doing for your mom and dad right now. Home care, a lot of times the primary caregiver is family. It's the spouse, it's the kids, and there's so many.
They're coordinating appointments with nurses and caregivers coming in and out. Yeah.
There's assisted living. This is where you are semi-independent, but you require some help. There's memory care. Just down the street from our office is a memory care facility that, for folks who have dementia or Alzheimer's or things like that. And those are very, very real. Nursing home. The average throughout the state of Ohio per month for a private nursing home room is $9,520 a month.
Man.
That's the average. That means there's some higher. That means there's some lower, but that's the average. So, I mean, you're pushing $120,000 a year for care. So it's not something that we could really just push aside and say, well, if it happens, it happens. If it doesn't, it doesn't. Well, I'll kind of worry about that when I get there. Now, if you saved several $1,000,000, that you can certainly afford to, pay, yourself, self-pay. And that's one way to pay for it is self-pay. And, you can certainly do that. Now, for a single person, the way that spin down works is that a single person can only keep a maximum of $2,000 of their own money before they could get government assistance.
And I don't think anyone listening is trying to hope for government assistance, but that is good to know.
Yeah, I mean, they're not, but I mean, you're not going to get any help. I mean, Medicare, the max they'll pay is 100 days, and that's for skilled care.
Right.
Okay. Skilled care is rehab. You have to be hospitalized for 3 days, and then you have to be recommended to go to a skilled care facility. So, for instance, if an elderly person had a hip replacement surgery and they need to go in for therapy and they're recommended to go to a skilled nursing facility for rehab, then Medicare would pay 100% the first 20 days. And then there's a deductible days 21 to 100. But after 100 days, there's no help. And if it's custodial or intermediate care, they don't pay at all. So Medicare doesn't really help. The only government agency that helps is Medicaid.
Right.
You have to be essentially broke. Now, for a couple, the community spouse or the spouse at home can keep a maximum of $157,920. Okay, so that's a maximum the at-home spouse, the one that's not confined, can keep. So if you have $1 million, the most that you can keep as a couple is $157,920. And then there's some income things as well that they look at. So that's what self-pay is all about, is you have to spend your money first. And that's okay. I mean, it's our care. I guess we should be the ones to pay, but there's no real help elsewhere unless you have some type of plan other than self-pay. So what's another plan? Long-term care insurance.
And luckily enough, we've got that on my mom. So I have seen that pay off. Not quite as much as I wish it would, though.
Yes. I mean, it depends on your daily limit or monthly limit and, your overall lifetime maximum benefits. But one of the problems that long-term care insurance companies had was that they didn't really underwrite these correctly, because they were underwriting them like traditional health insurance policies where you had to be really, really healthy to get them. But it's the really, really healthy people that live a longer life and potentially need long-term care versus, those who had heart problems, cancer patients, things like that. Honestly, they should have been lining up to insure those people because they're less likely to use long-term care.
Unfortunately, that is true. Yeah.
I mean, it is. So, but long-term care insurance policies, there's a lot of companies are struggling to make a profit in that space. That's why you're seeing more and more of them not offer them any longer.
Well, if that's becoming less and less available, sorry to interrupt you, Greg. I mean, we've got our own wallet we can look at, but what are some other options, or are there other options?
Well, there are. So there is something called a long-term care annuity. That's not the official title, but that's kind of what it is. And essentially, for instance, let's say that you deposited $200,000 into this long-term care annuity. It can provide 2 to 3 times the deposit for long-term care. So depending on where your health is. Okay. So it could be 200 could become $400,000 used for long-term care. It could become $600,000 used for long-term care. And over time, as the account earns interest and gets higher, then so does your benefit. Okay. So, and when you pass away, all your deposit plus any gains that it accrued over your lifetime still goes to your beneficiaries.
That's kind of nice.
If you use the benefit and your premium is all gone, then okay, you used it, and now there's no longer a death benefit. But so some people like that because the health requirements are less stringent because you've got a little more skin in the game up front.
Mm-hmm.
Okay. So that's an option. There are annuities with income riders that a lot of times we use for protected income. So let's just say that, I'll give you an example. About 15 years or so ago, right around that time, we had a family come in and they wanted an additional $3,000 per month to maintain their way of living.
Mm-hmm.
So remember, this is like 15 years ago, long time ago. And so we did that. We set up this annuity with a certain amount of money that is going to give them $3,000 a month as long as either of them live. However, this had a little feature to it that if either of them could not perform 2 out of 6 of their activities of daily living,
Mm-hmm.
that income could double for up to 5 years.
Okay.
So just a week or so ago, I get a call from this client, and he's like, Greg, I need your prayers. I said, oh, I'll be happy to pray for you. I said, what's going on? He said, well, my wife and I have been caring for our handicapped daughter, and she's now 65. We've been caring for her all along, and they're both in their 80s now at this point.
Mm-hmm.
And he said, but now I got to take care of my wife and my daughter. I'm about at the end of my rope. I can't go get my hair cut. I can't go to the grocery store. I'm having to have groceries delivered because I can't leave the house.
Mm-hmm.
In there.
And he's really, I'm tearing up on my side of the phone, and he's crying on the other side of the phone. And I said, I don't know if you remember this, but I said way back when you first came on board, and we set up the income that you get every month at $3,000 a month. He says, yeah. I said, well, you may not remember this, but it has a feature that if your wife can't perform 2 out of 6 of the activities of daily living, that income will double for up to 5 years. I said, we're about to get you some help. And now he was really crying on the other end of the phone.
Mm-hmm.
He said, you mean that I can get an additional $3,000 a month that I can use to help get help?
That's massive. That's caregiving, people coming in.
Yes. And, there's a lot of people out there that say, I hate annuities and you should too. But I tell you what, when you create a plan like this and you get a call and all of a sudden you are solving real life problems like this is why I love protecting income with annuities, because it can offer benefits that you can't get in other places.
Well, and not everyone needs more income. So it's not like you call in and we're going to shove an annuity down your throat.
Exactly.
It's not everyone needs that solution, but for those who need that extra assurance that their income's going to be there because maybe they don't have a lot to grow, they don't have a lot to be able to put at risk, they're able to have this as an option. Yes. Plus the extra added icing of these extra benefits.
Well, it is. And if, when 7 out of 10 people over the age of 65 are going to need care at some point, we need to have a solution of some sort. So this is certainly a way to help pay for those costs should those things ever happen. And I know I've got one person, I think right now we've got 4 or 5 families that are using this benefit.
We do.
Wow.
Mm-hmm.
That's
as
wonderful.
we speak. And then if all else fails, you can do elder law planning. And we've got a really good certified elder law attorney that we refer people to. And the thing about it, he's not a salesman. Not every elder law attorney group can say that, but I can say that about this attorney, that he's only going to do what's in your best interest.